We have this huge pile of trouble. Distressed debt pool in America has grown to the largest since 2020. Well, what was happening in 2020? You had all sorts of loans that were given to everybody and anyone because we were in the middle of a crisis. Well, supposedly, or even when this started, we weren't yet in crisis. Are we in crisis now? Because if you're just driving down Main Street, things look kind of normal. It's when you're paying attention to what's actually happened that you go, oh my gosh, this is not a good thing. And that's what I'm telling you. This is not a good thing. Deteriorating market liquidity conditions may pose risks to financial stability. Do you think? We have been talking to you about liquidity for years, and now even Janet Yellen is talking about the Treasury buying back Treasury bonds because of the lack of liquidity in the flippin' Treasury market. This is supposed to be the safest, largest, and most liquid pool. So you think if there's a problem with liquidity in the Treasury markets, there's not going to be a problem in the subprime, the below investment grade quality of these corporations, so many of which cannot even pay the interest on their debt and are compounding interest. This whole system has to reset. There's really no choice about it. Dollar-denominated corporate bonds and loans trading at distressed levels as of October 7th, a 21% jump from a week earlier. Are you kidding me? I hope you're starting to see the challenge that we have ahead of us, because that liquidity issue is not getting better. More pain ahead for banks as investors balk at risky buyout debt. Because now that interest rates are rising, I mean, tell me, would you really rather take on risky debt? Why would you jeopardize your principal? That really, frankly, is the point of gold and the point of silver in your portfolio. Because now is not the time to take on or hold or carry debt and risk. It is the time to get to a safe haven. And Bank for International Settlement says the only financial asset that runs no counterparty risk, the only one, that's your flight to safety. And I can't stress it enough. Banks typically provide temporary funding commitments for buyouts, earning fees that can sometimes run into the hundreds of millions of dollars. That debt is then sold to institutional investors before the acquisitions close. So they're supposed to be short-term bridge loans. But if buyers back away from these markets, then you've got a loan that you can't sell. Now it's on your book. And you don't care as long as you're selling this risk to somebody else. And institutional investors typically are buying, using your money to buy this crap with. So I'm glad that they're backing off. But what I really want you to understand is that while Wall Street banks trying to offload tens of billions of dollars in high-risk leverage loan buyout debt, they're finding it increasingly tough as yields surge. And what that's indicating is a shrinking base of buyer. You have forever heard me talk about, what do you want? You want the broadest base of buyer, because that's when you have control over a true buy-sell market, right? You've got to have a buyer for every sale or you have no market. I mean, it really is just as simple as that. So what do you want? Do you want the most narrow pool of buyers? You got one buyer. Okay, that buyer decides to go away. You got no buyers. That's what the banks are facing right now. Or do you want the broadest pool of buyers? You see the difference? Physical gold, physical silver have the broadest base of buyers simply because they are used in every single sector of the global economy. Unlike this garbage and the fiat money garbage, this stuff, one market, which is the financial market. This also financial market, but medicine and art and everything else. This one area. And now when you're looking at things like CLOs, who typically buys them are those institutional buyers. They're the big buyers, so they're setting up for your retirement. How do you feel about that? You can't count on these guys in this environment. But besides having the broadest buyer base, gold is physical, it's real, not the spot gold market that you're looking at, right? Because we've been watching premiums go up. We've been watching breakouts in this level of collectible coins and higher level of more rare. The ultra rarities have a huge breakout. That's the big money. That's the money at the top. So what about gold? It's indestructible with the broadest base of buyer. And you may have even seen this on TV because this is from Queen Elizabeth, who recently passed away. And her scepter and orb, which are made out of gold, were created in 1661. That has withstood the test of time. Dynastic wealth is wealth that lasts in families at least 300 years and survives currency regime shifts and wars and everything else. But what Wall Street wants you to see, what the central bank wants you to see, what the government wants you to see is their version. And even in their version, where the NASDAQ has dropped, 32%, and the Treasury has actually, the price of the Treasury has dropped 16%. There's gold, and it's dropped 10% in spot gold contracts, while at the same time in the physical world, they're breaking out. Because in the physical world, that is a true supply and demand market. China's premiums are the highest that they've been through the last two crises because demand has exceeded supply. You go to Wall Street's products and gold spot contracts and all of that, right? They can make as much of that crap as they want. There are no limitations on that. But you go into the physical world and there's a finite amount. So we're going into a huge crisis. What do you want to go in with? And frankly, you've noticed the rapid inflation. I mean, if they can keep it low enough at a level, you don't notice. But when it runs really hot like it is, which they're always surprised about, that's who you're going to trust to take you through this? I don't think so. I don't think so. You give me real. You give me honest. You give me something that's invisible and runs no counterparty risk. That's what I want.